Let's talk about quarterly taxes. I'm going to try to keep my teaching to like 30, 40 minutes so that we can really have like a robust Q&A period. You are welcome to put questions in the chat as I go, but just FYI, as I'm teaching, know that maybe 30 minutes in will be I'll be paying better attention to the chat. Okay, so what I'd like to do is start out by drawing kind of conceptually what your tax return is doing in this sort of buckets diagram that I've been working on. And it's a good way to kind of get your head around what we're doing with the project of estimated quarterly taxes. So let's talk about that. When you do your taxes, if you think about it, our tax system is a pay-as-you-go tax system. And what that means is that you are meant to be paying your taxes. All taxpayers are paying taxes without perfect information. We are all paying an estimate. And that's not just true of those of us who are self-employed. If you're in boot camp, you have self-employment income, and that's kind of who it's designed for. But even people who have jobs, who have W-2 jobs, those people also are paying their taxes throughout the year and they're just paying an estimate. Why? Because your tax rates are based on the tally of every single dollar that you actually earned. And we don't know that number until the year is over, right? So during the year, even though you have to be paying during the year, you don't know exactly if you're correct during the year. You only know after the year, right? So let's just do a visual, like let's conceptualize that. So here's a bucket, not very nicely drawn. Do like that. Okay, so this is your bucket, and there's your income, right? So the job of a tax return really is retroactive. It's retroactively to count how much income was in the bucket, right? How much income did you actually make in the year 2025? I'm saying this because right now we're in 2025 and you have to actually pay taxes in 2025. Even though your 2025 tax return, we're not even going to start working on it till 2026, right? That's the weird thing, right? Um, so it kind of makes sense, but what I want you to know is like I think there's a lot of insecurity that we tend to feel because we're like, I don't know if I'm doing it right. I don't know if I got the number right. And I just want to relieve your feelings there. Like, yeah, like that's how it works. You kind of don't know. And that's not because you're bad at this. That's because you don't know the future, because nobody knows the future, right? So what goes in the bucket? What goes in this income bucket that when we do our taxes in 2026, before April 15th, 2026, when we do our 2025 taxes, let's just label it here 2025. Um, what goes in this bucket? Well, everything. All of your income is going in there, right? So for most of you watching this, the hard part is your self-employment income, right? You kind of know that. That's why you're here, right? So that income goes in here, right? And that's the tricky part, let's be honest, because for self-employment income, you don't even know what's taxable without bookkeeping, right? You have to do bookkeeping to track your gross income, right? That's like all the money, all the invoices paid by clients, all the artwork sales, however you're making your money, but you get to subtract expenses, right? So you're not taxed on 100% of what you invoice clients, 100% of the checks you get from a gallery, 100% of the grants you get, whatever, however your income looks. You're not taxed on 100% of that. You're only taxed on whatever's left after the expenses of running your business, right? This is the point of bookkeeping. This is why we do bookkeeping. Okay, so that's hard. That's why bootcamp exists, because this is hard, right? So this is going in that bucket. Now, it's possible that you are single and that your only income is self-employment income. That's possible. That's one scenario that could be true for you, right? If that's the case, then when you do your quarterly tax estimates, they're going to be accurate if they're entirely based on your bookkeeping, right? And that's because there's nothing else in the bucket kind of messing with that, right? But for everyone else who's got other things, now your other things might be very minor, like bank interest. That goes in the bucket. That's a kind of interest. That's a kind of income. Bank interest, right? Usually that's tiny, right? That's nobody's main source of income, at least not anybody here. Um, but you also might have a day job, right? You might get a W-2 from being an employee somewhere. Okay, so now I just want you to see that there's other stuff in this bucket, right? And all of you are gonna have a different scenario. Some of you still, the self-employment is like most of it, like maybe all of that is the self-employment income. Maybe this little bit is like some bank interest and some W-2 income from like a little bit of a job. But this is going to be different for everybody, right? So just keep that in mind. It's holistic. All the income is going into the same income bucket that we're going to count on the tax return next year. Okay, what else could be in this bucket? I mean, literally anything. Farm income, fishery income, rental income if you are a landlord, or if you rent out an Airbnb. Um, what else? Oil and gas, mineral extractions. You know, whatever you want, however you're making your money, it's all going to be income that counts in this bucket. Okay, now some of you, if you're single, it's simple because there's one bucket. If you're married, how many buckets are there? Well, that's not an easy question. That depends on if you file a joint tax return or if you do married filing separately, right? So if you file separately from your spouse, married filing separate, then each of you has your own bucket, right? But a lot of people, probably the enormous majority of married people, I'm not saying you have to do this, but if you're one of the many, many, probably majority of taxpayers who file married filing jointly, then you and your spouse have one bucket, just one. So also in this bucket is spouse's income, not your spouse. Right? So your spouse might also have a W-2. So there might be another W-2. There might be, in fact, your spouse might even also be self-employed. Right? So if they are, that income goes in here too. Okay? So understand this bucket's going to have a lot of stuff in here. And you have to pay taxes as you go throughout the year. We all do. And it's going to be based on the totality of this income. And you're going to do your best guessing at how big this bucket is, and therefore what kind of tax rates you'll have. But you're not, it's okay. You're not perfect. It's not going to be absolutely perfect. That's why we file taxes. It's to reconcile the imperfection of estimates, right? So that's the purpose of a tax return in the first place. And just, you know, not to put too fine a point on it, but you can actually see this bucket, right? It's not visual and beautiful, but on your 1040, and it can help you to pull out last year's 1040. So your most recent tax return is 2024. So you can pull out last year's tax return and you can see what income was on it. This summary page that has 1040 at the top and the year in it, this page one, this is page one of your tax return. The bottom half is a summary of income. In other words, the bottom half is this bucket, okay? So you can actually see all the little line items that are in there, okay? This is information that's available for you from last year, from your most recent tax return. We'll get to what else you can see in a minute, but there's other stuff you can see too, which will also help you. Okay, so how are you going to pay taxes as you go, right? When we don't exactly know what our tax rates are, right? Tricky, a little bit tricky. Okay, so you've got a tax bucket. I'm going to see if I can make a good spigot here. There. All right. So there's one spigot. So down here, you've got another bucket, which is your taxes. Somebody just gave me feedback that I draw the second bucket too big. They're like, it's terrifying when the tax bucket is too big. So I'm gonna try to make it small. We'll see if I can fit all my writing in there. So this is taxes, right? Okay, So you've got some spigots. Mark was helping me design these like for the book. So this image is going to be in the book. And I was like, we're kind of working on these diagrams together, and Mark made the water coming out of this like really robust. And I was like, that's scary too. You can't, it should be a trickle. We're gonna scare people. Okay, so all right, so you have one spigot paying into your tax bucket, and this spigot we'll call W-2, right? So if you have payroll withholding, if you have a day job, then you have some money paying into your tax bucket, right? All year long, every 2 weeks, every time you get paid, you have money going into that tax bucket with your payroll withholding. Okay, so that's one of the spigots that's already paying as you go. Now, if all your income is from a W-2, if you're, just an employee and you don't have self-employment income, first of all, you're not in boot camp. So this is a theoretical person here. But if that's you, done, right? That's it. You don't have to worry about all the rest of this stuff. You don't have to worry, you don't have to show up to this class on estimates, right? So if you're watching this right now, that's not you, probably. So there's other spigots that you might also have. Here's another one, right? That's not very beautiful. I swear to you, I did go to art school, but you can't tell from this. Okay. So there's another one, and this one we're going to say is your estimates. Okay. So estimated taxes. This is another option for how you can be paying as you go into your taxes for 2025, right? That's your 2025 income. This is your 2025 tax. Okay. Right? Makes sense? Okay. Now, if you're single, it kind of stops there. There are some other ways to pay in. They're not that robust. Like if you take a big distribution from your IRA, for example, you can check a box that says, do you want tax withholding? Just a little warning there. That's not very fine grained. I've seen people check that tax, yes, withhold tax thing when they took an early distribution and not realize that it's not fine tuned. It just like takes like a blanket 10%. I had a client do this, and he still owed like $80,000 because he was in a very high income tax bracket, and 10% didn't nearly cover the taxes he owed on that. So just a warning, that's not a fine. It'll take some tax, but it's not necessarily correct. Okay. So there could be other spigots too, but these are the two biggies, right? Okay. Now, if you're single, that's it, right? But again, if you have that joint bucket, or if you're married filing separately and you have your own bucket and your spouse has a bucket over there, great. Those are your two spigots, you're done. But if you're married filing jointly, you have more spigots, right? So you also will have a spouse spigot for their W-2. I'm confusing myself with this drawing. Okay. So you might have a spouse W-2. See, I need to draw big buckets because I don't have enough room to write. Anyway, so your spouse might be with their W-2 also paying into that bucket, right? So each of your W-2s is going to be its own spigot, right? Now, also, if your spouse makes self-employment income, they might also have another spigot, and that's supposed to go into the bucket. These are some crazy looking spigots here, but that could be estimates too. Okay, so spouse estimates. So in theory, you could have a whole bunch of spigots, right? A whole bunch of ways to be paying into these taxes from you, also from your spouse, from your W-2, spouse's W-2, your estimated taxes, their estimated taxes. Okay, does that make sense? Okay. All right. So the cool thing is, if you think about this, what I like about this metaphor is that the taxes, all the income is together, all the taxes are together. It doesn't matter how you pay them, through which spigot. The IRS does not care. If you want to pay all your taxes by withholding as much as you conceivably can withhold from a W-2 job and just skip paying estimates, great. As long as you fill your tax bucket to the place roughly where you owe, Good. Done. Easy. We like easy. We're not mad at that. Nobody's mad at that, right? Do that. The problem is if most of this bucket is self-employment income, like let's say that much of your income is self-employment income and only this little bit is from a W-2, you're not going to be able to get enough money taken out for taxes through that W-2 withholding to cover what you owe for your self-employment, right? So just the proportion, there's just not enough water, not enough money there. Okay. So the bigger the proportion of this bucket is being taken up by self-employment income, the more you have to use the spigot of estimated taxes. Okay. Okay. So really what I want you to get your head around there is that all of these things kind of lump together. Your tax return summary is going to actually show it all lumped together too. And please understand, if you're married filing jointly, I know many of you are single or not married, and that's all totally fine. The only reason I'm emphasizing the married thing so much is that when you have a whole other person adding to this income bucket, it makes it just more confusing. So I get a lot of questions from married people, like, how do we handle our income together? You'd be shocked how many people ask me if they should get married. And I'm like, do you love them? Are they good to you? Are they a good partner? That's the answer. But anyway, taxes, I hope, are secondary. Okay, so this is your bucket. The page one of your 1040 is going to show you everything in that bucket, right? And remember, you're not going to get this until 2026 when this will be a 2025 tax return. That form doesn't even exist yet in the world. But at that point, you'll be able to actually look at it. Okay, so these payments that you're making out of the spigots, the really wonderful thing that I want all of you to really clock, because I think a lot of people are anxious and feel like, well, I don't know what happens to that money. Where does it go? This is the nice thing, is page 2 of your tax return. Page 2 of your tax return actually tells you, right? So if you look, you can only look at the most recent one, which is 2024, not this year, but last year. You can see that in this section here, just below the taxes section, it summarizes your payments, okay? So what you can look at is you can go look at last year's tax return and see just exactly how much of the payments that you had filling this bucket were coming out of W-2 income, W-2 withholding. Let me find it. It's line 25A. I know this is very small to be showing you, but in that payment section, it's right near the top because that's the huge majority of taxpayers. That's what it's from. Okay. So that's there. It's also really important for you to know that line 26, let me write it here. Okay. W-2 is going to be line 25A. If you want to reference that. This is such a mess. I apologize. But if you have estimates, those are going to be line 26. Okay. So line 26 says 2024. I'm looking at the 2024 taxes, estimated tax payments and amount applied from your 2023 return. Okay. So all the estimates that you make, including this one for the June 15th deadline, all these estimates are filling this bucket. So these payments that you've already made, you get the credit for them. This payment section right here is your credit. This is saying, no, you've already done this. We see that. I will make note that there is nothing automatic that's going to report your estimated quarterly tax payments on your tax return. So please, every one of you, because I always have a client who misses this, please remember to report them on your taxes. If you forget to report them, you will be given a bill that is much higher than what you actually owe because it won't be crediting these payments that you're making, which are prepayments of your taxes. Okay. So don't forget, don't forget, don't forget. Okay. I think that's about all that I want to tell you. Just to kind of go through this job, this reconciliation that you'll do after 2025 is over next year in 2026. on this next tax return. Um, you'll be tallying all the income that was in the income bucket here, second page of page one, second half of page one. And then up here, because we can only know what tax rate you're subject to once we know every dollar that was in that bucket, this is where you actually make that calculation. It's on your tax return. So this is where you reconcile the estimate that you did all year versus the actual, right? So at the top of page 2 is your tax and credits section. And you will find up there all the income from the page 1. You'll find how it calculates and what you actually owe, right? And so if you think about what you're really looking to do, the whole point of paying estimated quarterly taxes and paying out of your payroll withholding, all of the various tax paying you do throughout the year, your entire goal is to get this payment section to be as close to this taxes section as you can. Does that make sense? Does that like help a light bulb go off for you? You're trying to get your payments to be equal to the tax you owe. That's the goal, right? Now, the fact that we do a tax return at all is proof that most of us don't hit that exactly right. And that's okay. You're not going to jail. Nobody's going to knock on your door. It's okay. That's normal. They're estimates, and we can't call them estimates and then be mad that you didn't get it perfectly right. We call them estimates and then we reconcile, and whatever the difference is where we kind of missed perfection, we make up for it right here. And that's where you're going to see if you overpaid your taxes, right? If this payment section was higher than the taxes section, you get the money back, right? You get a refund. And you will see your refund listed in this section right below payments called refund, okay? So it'll be right in there. And then if this payment section was lower than the taxes section, it happens, you're going to have it listed in the amount you owe. And that is, that's just your underpayment. That's how much you underpaid. Okay. You missed the mark and you were under. That's okay. Again, you may have a little bit of a penalty if you were supposed to be paying quarterly taxes and you didn't. You may have a little bit of a penalty there. I don't want anybody to feel super alarmed at estimated quarterly tax penalties. I know I talk about them a lot, and sometimes I think people hear that, but they get it a little like maybe my tone is wrong because I think people get overly upset or worried about it. They're not very big. They're really not like meant to be punitive. They're meant to kind of nudge you like, hey, you don't have to pay this. If you just, would pay a little bit higher payment, you won't have any penalty. Okay. All right. Awesome. Okay. Okay, I'm seeing a question. All right, that looks like somebody who's not watching live, so I'm gonna save your question. Okay, so let's just go over what what the two safe harbor thresholds are for your estimated quarterly tax payment. What I want you to keep in mind from my bucket, my very messy bucket analogy here, is when you pay estimated quarterly taxes, what we're basing that off of, and what I'm teaching you to base it off of in Money Bootcamp, is your self-employment income. Okay. Now, I'm doing that because there is no way for me to know, or for your bookkeeping software to know, what else is happening in your tax picture. My spreadsheet or your QuickBooks, it can't see your spouse's W-2, right? It can't see your W-2. It just can't see that stuff. All it knows is what you're entering for your income and expenses for your business. And in general, for most people, your underpayment of taxes is pretty close to the amount you owed for your self-employment. So this is the hard part, and this is why we're basing it on this. But just keep in mind, this might not be the only thing in your tax bucket. And if you have more and more and more things in your tax bucket, especially untaxed things like rental income, farm income, then you're going to need to also be considering that as you make estimated quarterly taxes. You may need a whole another set of books to determine an estimate on those things, right? If you are a landlord and you make a substantial part of the income in this bucket from rental income, then you're going to also need to pay quarterly taxes for your rental income, okay? And of course, if you're a landlord, you're also tracking your expenses of being a landlord, which are many. And so you get to take that out. So that's a whole other set of bookkeeping, joy upon joy. Okay. All right. So I'm going to erase this and we'll talk safe harbors. And then I'm just going to open it to your questions. We'll do like a question heavy session today. Okay. Awesome. All right. Saunders, thank you about the visual learner. Yeah, I totally agree with you. I have to tell you, there's something so wonderful about writing this book and kind of like having this moment in my life to make illustrations of these things. It's like definitely getting me thinking in a different way. And I agree. But good. I'm always looking for refinement on these on these illustrations. So if you have a suggestion, please feel free. My agent the other day was like, I think you're trying to fit too many things into your spigots metaphor. And I was like, well, show me what I could do better and I'll do it. But I haven't thought of anything better yet. Okay. All right. So safe harbors. Oops. Uh-oh. I think I need a new marker. Okay. Let's see. Do you? Oh, much better. All right. Estimated quarterly taxes. Awesome. Okay. So for quarterly taxes, let's just kind of run through the who, what, when, where, why. We'll go fast because I think, you know, if you've been in boot camp for a little while, you've seen this taught before. But the when, let's lay out the deadlines. So April 15th is the first one. June 15th, coming right up, is the second one. September 15th is the third one, and then January 15th is the fourth one. You will notice these are all on the 15th. If the 15th happens to fall on a weekend, as it does with this June deadline, then you have until the Monday following. So your deadline is really Monday. I like to say the 15th and not clarify sometimes about the Monday because, you know, sometimes somebody is watching a video a year later. So I want to be careful. But yes, this year, 2025, you have until Monday. So you get 15 days after the close of that quarter. And why do you think you get that? It's to do your bookkeeping. It's to give you a little bit of time, not a lot of time, but it gives you 15 days from the close of the quarter to actually calculate everything. Okay. And so one of the easiest sort of cheat sheet versions of how to calculate your estimated quarterly taxes is just use an online income tax calculator. That is not a bad method, right? You can do the math that I teach you, and that's great. And I like that because then you understand how it's working. But if you just want to plug your, you know, do your books, figure out what your profit is, and then plug that into the AARP online tax calculator that Mark very helpfully just stuck in the chat there, do that. Easy is great. Do it. Okay. Okay, so those are the deadlines. Okay, who has to pay? What's the rule? The rule says if you have a tax bill greater than $1,000, then you have to pay your taxes quarterly. You must make a quarterly tax payment. Okay. Now, let's just think about that for a second. You can find that information. This is knowable information because it's on the summary pages of last year's tax return. So if you pull out your 2024 taxes, the tax return you did due in April, you can actually find out if you're over that threshold. What's another word for tax bill, or another phrase, I should say, for tax bill? It's amount you owe. And you will find that right here, line 37. Okay, I'll write that down. Line 37. Okay, so if you look at your 1040 and line 37 is greater than $1,000, you got to be paying quarterly taxes. Okay, now remember the bucket is a whole bucket, right? And you might have other things in your bucket, okay? So it's possible, your income situation might really move around a lot, right? You might have just moved to California from North Carolina, and you might have taken a new job and have a little bit of new income, right? Things could switch up a little bit. And so this is just a baseline that tends to be about last year because last year is a knowable fact, right? We can't make tax laws that are based on the future because the future is not something we can say for sure. And so, if you just switch from being totally self-employed to getting a job with a W-2, then you can ignore this, right? If you're having your taxes withheld through a paycheck all of a sudden, you don't have to go make stuff up and start making estimated quarterly tax payments if you have no self-employment income. It's okay because you're going to get that covered with your W-2 payroll withholding. But this is, absent a change. Okay, that's the meaning of that. Okay. Next, irs.gov. That's the where part of where you pay. Don't forget your state counts as well. You're going to also owe a quarterly tax payment to your state. And the state deadlines line up with the federal, so these are the same. And yes, it's, you have to do your books for one, you have to do your books for the other, so it's like just do them together. Okay. What else did I want to say there? Okay, so let's talk about the safe harbor thresholds. The safe harbor thresholds are basically how you make the calculation, or how you guesstimate, right, what you owe. It's not gonna be perfect, and that's okay. So the two safe harbor thresholds. Okay. Now, the reason they're called safe harbors, this is not the only place in the tax code where there's a thing called a safe harbor. There's actually multiple safe harbors in US tax law. But a safe harbor basically is a way to create a law when you're doing stuff that's estimated, right? Because we don't know what you're going to make in 2025. None of us has a crystal ball. None of us really knows what the next 6 months has in store for us. So you need a way to know that you've done good enough. Okay. And the safe harbor is like a good enough threshold. If you meet one of these, what it means is no penalties. Okay. No penalties, no interest. It doesn't mean you've paid the right amount of tax, and you will still have to pay all the tax that you owe. That doesn't go away, but it does mean you won't have any penalty. So you can be safe from that. Okay. So the first one is the easy one. You can pay 100% of last year's tax. Now, paying your taxes based on last year is really great. It's much more knowable. It's much more predictable. It's certainly much easier. So where's the scenario where this works really well for you? That scenario is when this year's income is very similar to last year's income. If that's true for you, God bless. Like, I'm happy. Good. For many of us, if you work for yourself, if Trump's tariffs affected your life the way they did affect mine, and they changed your income really, really radically, or if you suffered from a natural disaster, and I'm really sorry that that happened to you, then this is not going to work very well for you, right? So when you have a dramatic change in income, basing this year's tax on last year's tax might not serve you well. But if it does, if this year's income is looking very similar to last year, use safe harbor number one because it's super easy. This is the easy one. So how would you do safe harbor rule number one? Well, what you're going to do is you're going to pay this year's estimates based on last year's taxes. Okay. So again, as we look at this, remember, these are going to be, these numbers and these rules are based on your whole bucket, right? Your whole income bucket, your whole tax bucket. And so your proportion coming out of the spigot of your estimated taxes might actually be a little smaller than the whole thing. Okay, so just keep that in mind. Okay. Uh, All right. So total tax in the page 2 part of your 1040 summary, up here on the top of page 2, this is the part that says your tax from last year. This is where you do the calculation last year of what you actually owed on all of the taxable income you had last year. That's the final line in this taxes and credits. And that is line 24. Line 24, right there. Okay. So this is pretty easy. Let's just kind of walk through how we would do this. Let's say I'm looking at last year's tax return and I can see my line 24 from last year is $20,000. I'm making up that number, but let's say that that's true. So I owed $20,000, or sorry, I didn't owe, but you know, my total tax for the year was $20,000 based on last year's tax return. So great. I will now base this year's estimates on that number. So I'll take 20,000 divided by 4. Okay, who's going to tell me why? Why am I dividing that by 4? You want to put it in the chat? Why am I dividing it by 4? Awesome, Catherine, good job. Yes, good. You're paying attention. Love it. Okay, so yeah, we're determining a quarterly payment. So 20,000 divided by 4 is 5,000. So how are we going to work this? All right, well, before the deadline, which is this, what is the deadline? Sunday? It's really Monday, but June 15th is Sunday. So we're going to log in to irs.gov. We're going to click that button that says make a payment. And then when in the drop-down menu, estimated quarterly taxes or estimates, you're going to select that. And we're going to make our payment of $5,000. Okay, that's the one that's coming up. Now, hopefully you did this in April as well, and you've already made that first one of 5,000. Okay, so now you can chill out. You can wait. You can let that calendar reminder just cue you up again in September, and you'll come back in September and you can make that third payment, and then before January 15th deadline, you come and make that final payment. Okay. So when we add all of these numbers up, it equals 20,000. Did we meet safe harbor number 1? Did we pay 100% of last year's tax? Yes, we did. So cool. No penalties, no interest. Now, what if I actually owe $21,000 in tax in 2025? What happens? Well, I'll just have a bill of $1,000, right? I'll have to settle up, right? And that's the job of next year's tax return. That's where I'll settle up. It's fine, no punishment because I met the safe harbor, okay? What if I overpaid? What if I actually don't make that much money? What if I owe 18,000? So I've overpaid by 2,000. Well, cool, it goes the other direction too. Then I'll have a refund of $2,000 this year, great. And in fact, there's an option on your taxes. You can have your refund applied to your first quarterly tax payment if you want to. So you can do that. Or you can just get it in cash. That's also fine. Okay. A little detail for higher income earners. If you have income over $150,000, oops, 150K. If your income is over $150,000, remember this is profit, right? This is after you take expenses out. Then this percentage bumps up to 110, okay? And the reason why that is true is because we have graduated income tax rates. Your taxes are a little higher the more income you make. Your taxes are lower the less income you make. And so your tax rates are actually a little higher when you're making that much money, and you're not going to cover everything you owe unless you bump up that percentage. So that's why it's higher, okay? So if you're making good money, you know, over $150,000 per year, your threshold is a little higher to meet the safe harbor, okay? All right, now, safe harbor rule number 2. What happens, and I can use myself as an example this year, although I wish I couldn't. What happens when your income drops, right? What happens? So I'm going to tell you a true story, which is that Our president has been doing some banana stuff with tariffs, and people got really scared. And they got scared right at the moment when I'm in sort of peak launch season of my year, my income generating season. Well, my income, and this is just absolutely true, it dropped by half, right? Once those tariffs came in, people were really frightened, reasonably, right? I don't blame anyone. I was too. And they were like, I don't know if I should spend money right now. So I had a huge drop off in sales and I only made half the income that I thought I would, right? Yeah, not so fun. Not such a fun time, especially going into a book launch where I'm effectively going to work for free for the next year. So it's really scary. I'm kind of freaked out. But anyway, that really happened to me. That is really the boat that I'm in, standing in front of you right now. So my income is half of what it was last year. What am I supposed to do? I don't want to have to pay estimates based on last year's taxes. That's going to be really awful, right? And actually, I'm kind of cash strapped. And so I really don't want to do that because I need the money, right? Just to operate. So what are we supposed to do when something like that happens? Um, well, that's why there is a second safe harbor threshold, which is that you can pay 90% of this year's tax. All right, let me erase this other stuff so that we don't get too confused. Okay. And again, with that higher income threshold, if you make over 150K, then that is actually going to go up another 10 percentage points to 100% of last year's tax. Okay. Um, I'm seeing, yeah, Karen says I relate. I'm really sorry for those of you who relate. I'm so sorry. I'm not, I know people who've had much more horrible experience. I have a very good friend in town who has this awesome company selling nutcrackers, and they're made in China. So imagine what happened to her business. It's much scarier than mine. So there's some people who got, the musical chairs hit them really hard. Okay, so 90% of this year's tax. Let's just take a pause for a minute. Is it ever okay to really just pay 90% of your tax? Is that a thing? No. Obviously, what this is setting up is that, this is a baseline for you to pay in estimates. And they're saying if you hit that number, we'll let you pay the last 10% at tax time, right? It's not saying you never have to pay that last 10%. It's not a discount on your taxes. It's just saying it's okay as long as you're within 90% of what you owe, you're cool, no penalty. Okay. So for me, this is what I'm aiming for this year. I'm trying to hit 90% of the tax I owe for this year. Okay. How do we know the numbers for this year? Who wants to tell me the answer in the chat? How do I know this year's numbers so I can base it off 90% of this year's tax? Okay, Karen. Karen, Lindsay, good job. Yes, bookkeeping. That's the answer. So this requires bookkeeping. You're going to have to actually keep doing your books and know in real time. Now, as much as that probably feels to you like a lot of work and maybe not what you wish you had to do, it's actually really nice because then you can make a tax payment based on the actual money you made, not on last year's, a year ago's life that might be very different feeling from the environment we're in today. And so I'm going to base my numbers based on real life, real numbers from this quarter. And that's going to be so much more accurate than basing it on last year. Okay, so let's kind of do a little example of how that's going to work. Let's say, that I brought in for this quarter, let's just say that I brought in $30,000 for the quarter in income, gross income, and that I spent 20,000 to make that 30,000, right? So 20,000 in expenses. Okay. So I've got 10,000 in profit. Okay. All right. So what I'm going to do is I'm going to, you do your bookkeeping so that you know what your profit is. And then you're going to do a calculation based on the profit. Now, cheat sheet version, you can plug that payment, you can plug that profit into an online tax calculator and see what it says you owe. And I totally do that. That's absolutely fine. Make sure if you use an online tax calculator, you have to make sure that you correctly categorize that income as self-employment income. Why? If you don't, it's not going to calculate self-employment tax. And self-employment tax is a large factor of the taxes you owe when you work for yourself. And you don't want to underestimate your taxes, your tax payment, because you forgot to categorize it as self-employment tax. That's going to give you a very unpleasant surprise next April 15th when you actually owe the rest of it, right? We're trying to avoid that. That's the point. So $10,000 of profit, that is going to look like, what's self-employment tax? Who wants to tell me in the chat, what is self-employment tax? What's the rate? It's the same for all of us. What is the tax? Karen, pretty close enough. It's 15.3%. Exactly. Good job, everybody. So 15.3% times $10,000 is going to be my self-employment tax. So that's going to be 15.3% is going to be $1,530. Okay, messy, sorry. Okay, now a little detail. If details are not your thing, just tune out for a minute. But if you like details, listen up. You're overestimating the number when you do this because 1/2 of your self-employment is actually deductible. So when you really do the rate, like using real tax software or an online tax calculator, you're going to find that it calculates your self-employment tax at a rate that's closer to like 14.8%-ish. It's going to depend on your total income. But the reason that is going to calculate less than 15.3 is that that's factoring in the fact that half of this number is actually deductible. Okay. Now here's the thing. Some people get really worried about stuff like that and think, oh my gosh, there's all these little details that I need to factor in. No, you don't. No, you don't. Because what we're doing right now is this. We are estimating the exact stuff, that 1/2 that's deductible. Just don't even worry about it right now. Just put it off. Next year's tax return is going to take care of that. And because it's a deduction, it's going to kind of put you in a better position than you thought if you're overestimating now. So this is why I don't even really bother saying a lot of details around this. Just say 15.3%, forget about the half of it that's deductible, and just know that you are slightly overestimating when you do this, okay? Now, figuring out what your income tax rate is incredibly tricky. It's incredibly tricky because your income tax rate is based on the total income in that bucket, right? And we're in June. We're only halfway through the year. You don't know what that is right now, right? That's okay. One of the ways to figure that out is to go look at last year's tax return. By the way, there's no place on your tax return that's going to tell you a percentage. You have to do math to figure that out. So you can do some math if you want to figure out what last year's tax rate was. And how would you do that? You would take your total tax, line 24, and you would divide it by your total taxable income, line 15, right? You're thinking that through, right? That's going to give you the percentage. What is the total tax I paid on my total income? That's going to show me the income tax rate. Also, it's time to understand here, that's on the whole bucket. That's the whole income bucket and the whole tax bucket. So if you've got other stuff in there, just understand, like, it's factoring in all the taxes, including self-employment tax. So it's a little tricky. And this is actually why I think an online tax calculator is better, because it'll be a little more fine-grained about these numbers, right? You don't want to use that averaged tax rate that we just talked about, total tax divided by total income. If you use that number, you might want to skip calculating your self-employment tax, because if you think about it, it's factoring that in already, right? Okay. That was a lot of math. Tell me if that was too confusing. Sometimes when I get too in the mathy weeds on these people, I lose people. So I'm trying to hit the line right, and sometimes I miss. Okay. All right. But I'm glad you have a little bit of the nuance. Like, it's tricky. I'm not going to lie to you. This is tricky. This is why you're here, right? Okay. So if you're doing it on your own without averaging and without a calculator, then you would say, okay, then you'd have self-employment tax 1530, and then your tax rate. And I'm going to say maybe my income tax rate would be, again, very tricky number to nail down, but maybe I'd say it's like 12%. So 12% of 10,000, 1,200. So this is going to give me 2,730. All right. Okay. Alternatively, you can just plug that into an online tax calculator and figure it out that way. That's fine. Okay, so that's going to be my tax payment for this quarter. Okay, so I'm going to log into irs.gov and I'm going to make that payment. All right, now that's based on $10,000 in profit. What if over the summer I make a half of that amount, right? What if I make $5,000 in profit over the summer? You know what? I'm just going to make a smaller payment then the next quarter. So maybe I'd do roughly half of that. And I'd say that's, what is half of that? Maybe 1,300-ish, right? So I'm going to make a smaller payment. Maybe income picks up again in the fall, and maybe it's back up somewhere closer to that, but maybe not as high, $2,000. And what if in the first quarter of the year I made good money before the tariff stuff happened? This is actually true for me. I made, good, normal, regular income in the beginning, before the tariff stuff hit. And so maybe that first payment was much higher, like 5,000, right? So what I want you to see here, the really important thing to know, these are numbers that are based on my actual bookkeeping, my actual number. So even if I'm really estimating, like I don't really know my tax rate, I don't have the nuance of my half of my self-employment taxes deductible, I'm not factoring all that stuff in, even with how rough this calculation is, this is still more accurate than paying 1/4 of last year's tax each quarter. Do you see that? Do you see how that's true? So what I want you to really feel comfortable with here is these really are estimates. This is about good faith and doing your best to make a good calculation. And as long as you hit one or the other one of these, either one, you don't get any penalties or interest. By the way, even if you don't hit these, if you were to undershoot this number, your goal is to overshoot, right? You want to hit the safe harbors. But let's say you don't. Your penalties and interest are on the unpaid balance, right? So your only penalty and interest is on the amount that you undershot. For example, I kid you not, I'm just telling you all my tax information. But last year, I had a $2 penalty in my estimated quarterly taxes. In my world, that means I freaking nailed it, right? Like $2 of a penalty, like to me, wow, did I get close, right? I'm feeling great about that. There's some people who see a penalty and they're like, oh my God, I'm in trouble. And they think it's terrible. It's not terrible. It's a nudge. $2 is a nudge, a very gentle nudge, one that you might barely even notice, right? Um, so it's not alarming. It's not like some black mark goes on your name in the government. It's not like that. Okay. All right. So it's only on the unpaid balance that you owe any penalty or interest. I will say this, the interest is based on the federal interest rate, and that's been going up. You've probably noticed. If anybody's tried to buy a home, you're like, oh, shoot, these mortgages not looking so great these days, right? Because interest rates are really up. So penalties are higher now than they were 3 years ago because interest rates are up, right? So that's true. But again, it's not super dramatic. It's in the nudge zone, not the like hammer zone. Okay, I talked a little longer than I intended to. I meant to give a really robust Q&A. So let's jump to the Q&A. And if there's more teaching warranted, then great. Okay, Saunders, thanks for joining. Great to see your name on here. All right, I'm going to skip back. I saw a question from Randy back here, so I'm going to answer that for the video. But the rest of you, if you don't mind showing your face on camera and you want to come on camera, that's fine. Or you can tell me in the chat. All right, so Randy's question. Okay, if I didn't pay Q1, would I pay Q1 and Q2 together? Is this separate paperwork filing for each quarter? Good question. So the good news is you can absolutely pay them together, or you can pay your Q1 payment as soon as possible, like today, and then pay the Q2 one before the 15th. If you missed a deadline, if you missed the April 15th deadline, don't wait until the next deadline to make the payment. The interest on that missed payment is calculated daily. So why would you want to wait 90 days when you could only wait 30 days? You know, that's better. So the point of giving you a daily interest penalty is to say, hey, it's going to be cheaper to pay today than to pay tomorrow, right? That's the incentive set up with that. Okay. But absolutely, pay as soon as you can is the takeaway. Also, very important to know, estimated payment is just a payment. It's actually really simple. Mark, if I could ask you, I made a new video from just a week ago of me paying my quarterly tax payment. And so you can watch me pay my own taxes a week ago. Mark, if you wouldn't mind putting the link to that video in the chat when you have a chance to grab it, then everybody can get that. I did send out that video recently. But you'll see how quickly I pay my taxes. It's easy. The good news is there is no paperwork. This is only a payment. There's no tax return. There's no paperwork. You're just making a payment. That's it. Okay. When you do sales tax filing, which is a whole other world, sales tax does have a bit of a tax return that you have to do each time you pay. And I think people conflate sales tax and income tax. They're actually two separate worlds. But you're just making a payment. No paperwork at all. The only like info you have to type in is enough info to match your name and social security number with you in the, IRS system, right? They just want to make sure that you're getting credit. You and your social security number are getting credit for the payment that you're making. That's all they need is like a basic ID check. Okay. So we're not bringing any other stuff into this at all, just a payment. Also, like, the system is so flexible. If you make a payment and then you're like, oh shoot, I forgot about that invoice that, got paid a little late. I made more money than I thought. You can log in the next day and put in an extra payment. Like, it's as adjustable as you want. You can go in and make 365 payments once per day for the whole year if you like, right? So you can spread these out however you like. The quarterly deadline is a minimum. Okay, that's all. All right, Randy's second question. I have other questions, but no bandwidth. Oh, there was no second question. Okay. I'm seeing, okay, Mark reposted Catherine's question that I missed. In boot camp video reinsurance, I said, oh, sorry, this is not a quarterly tax question. Okay. In boot camp, I said something about cyber insurance. Is that the same as paying for an Equifax monthly expense that puts a fraud alert on my, I'm trying to think of how you would categorize an Equifax fee. That feels like if that is business related, then yes, it gets to be deducted. I'm not sure how I would categorize that exactly, to be honest with you. When I say I pay for cyber insurance, that's business liability insurance. That is for Sunlight tax. That is a business expense. Your Equifax thing, that might be personal. So I would really is it a business expense? You have to really decide if it's for business or for personal. And if it's personal, it's not deductible. Okay. Great. I am scrolling through. Okay, good. Mark put the link in the chat to the new and updated YouTube video about me paying my quarterly taxes. You will see that I underestimate here how much tax I pay. You'll see that I'm paying quite a bit more tax than this. Um, okay. Any questions? Any more questions? I'll just keep talking if you don't. I'll tell you how I really paid my taxes this year. Um, so what that scenario that I said is really true. I really did make half the income that normal that I did last year, and that was scary. Um, and what I really did, and you can see it, is I actually paid the same. I actually did pay based on last year for my April payment and for my June payment, which was terrifying because it was a lot of money a lot of money compared to what I actually brought in. But I made two payments based on last year. And given that I've made about half, now I think I may be done paying taxes for the year, right? Because if you think about it, to June, halfway through the year, I've paid 100% of what I probably will owe this year. So here's the thing. I don't have a crystal ball. I don't actually know now what I should pay in September, and that's okay, right? Because I don't know what's going to happen over the summer. I don't know the future just like you don't. But what I'm going to do is basically in September, before the September 15th, I'll do my books. I will see if I made any money. Typically over the summer, I don't make any income because nobody wants to talk about taxes in July, which is fine. It lets me not talk about taxes in July too. Um, but so I probably will have no income, so I probably am not going to even make a September payment, which is fine because I've paid in probably everything I owe. Then in the fall, if things pick up, who knows? I'll do the calculation again after January 1st and I'll see, okay, I think I don't need to pay anything at all. Is that true? Let me check. And if I made more money than I thought, maybe I make up some ground and I'll be very happy if that's true. Then I'll make a little payment, right? I'll bump it up. And if I don't make money, I won't have to pay any tax, right? Because I've been very conservative and paid some big payments now that are, I think, probably a lot more than I actually owe. So this is me from a world of more, a couple years of experience, knowing like, I'm lucky that I have some track record in my business and I've seen patterns and I can be like, okay, I kind of know I'm not going to make any money over the summer. Okay. It would be nice if I did, but I'm not going to be super upset if I don't because that's kind of normal. Hopefully in the fall, so I kind of have a little bit of a sense of things. And I'm just, for all of you, I hope that gives you some hope and encouragement. That, as you do this one quarter after another, one year after another, you start to see the patterns and you start to have a sense for like what is enough, what is not enough, where you have to make it up. Okay, awesome. Karen, thank you so much for saying you hope I'll do well with the book. God, I hope so. It's so scary. The publisher is like giving me these numbers that I'm supposed to try to hit with book sales, and it is terrifying. It is so much work. Um, but thank you. By the way, by the way, Mark and I are working on like bonuses and discounts for, book discounts for those of you who are in boot camp. And the only reason that you haven't heard anything from me about that yet is I'm still on a deadline for the workbook, 2.5 weeks. And so I'm not even like dealing with the pre-order stuff really until July because I have a June 30th deadline. But thank you. I appreciate it. All right. Who else has questions for me? Happy to
I
keep it.
have one question,
Great.
How is a gallery that's an LLC, artist-run gallery, how are their estimated quarterly taxes different from an individual?
Um,
Just like in general, not detailed, but
yeah. Well, first of all, that's going to depend on their ownership structure. If that LLC is owned by one single person, like,
no, it's owned by each member, so it's a multi-partner thing.
okay. Well, in that case, then each of the partners, so then I'm presuming that the LLC is going to file a partnership tax return.
Hmm.
And
Definitely, yeah.
a partnership tax return is due March 15th, and the product of it is called a K1. A
Right, right.
K1 a K1 will then be distributed to each of the partners, and the
Hmm.
K1 shows that partner's share of income. So that partner, if I'm a partner in that gallery, I will get my K1 from that LLC. And then on my April 15th, my personal income tax, that income will pass through. That's what a pass through entity is. That income will pass through to my personal income tax rate. And whatever my tax rate is, I'm going to pay tax on the income reported on that K1. That K1 goes into the bucket, right? To add it to my metaphor. Um,
You
so,
get four K1s then? You get a quarterly K1?
oh no, just one.
No,
You get
just
one
one.
due to you once that partnership tax return happens, then
Mhm.
a K1 will get reported, and that's a document I'm going to need to do my personal income tax filing due
Okay,
15th.
okay.
Just one. Yeah. If accountants had to do 4 partnership tax returns for every organization a year, they'd all die. I mean, everyone would quit the profession. It just would never happen. Thank goodness. Um, but what's important to know is like that K1 and that income, like uh it might, depending on how big a proportion of my tax bucket that filled, I might owe a lot of tax on it. So it could be, if that's a tiny proportion of my overall income, I can probably absorb the taxes within the context of my other estimates and my other withholding. But if that K1 is like most of my income, then I should probably be checking in on the bookkeeping throughout the year to pay quarterly taxes to keep up with that. So that's if you're kind of wondering how that partner might manage their taxes based on their partner share. Um, if you're a partner in that, hopefully you have access to the books, um, unless you're just, your share is a minor share.
Well,
Does
we're
that
tightening everything up and we're getting profit and loss reports now, uh,
great?
monthly. So I'm trying to start from the bottom of my own understanding and I'm being involved in this
Yeah.
kind of partnerships.
Yeah, that's
Yeah.
great. Getting a P&L, profit and loss statement once a month is going to be really helpful. Um, and then, comparing that to your K1 and just like seeing how much you actually owe, it's going to be helpful
Okay.
over time.
Thank you so much.
Yeah, it's probably a learning curve, and probably the first, when you have no year before, it's always hard to do that first year when you have a big income change. This is like a year when I highly recommend that somebody work with a professional because that's the year you have a blip, right? Um, you have a whole bunch of income coming in a new way that you might not fully understand yet, its tax implications. That's the year you will tend to get a tax bill and be like, oh my God, I didn't realize, right? Um, all right. Um, it's looking like not a lot. I'm still here, happy to stay until 4:30. Um, or 4:30 my time. You might be in another time zone. Um, but happy to answer your questions if you have any.
I have one, Hannah.
Sure.
I did something dumb. I received a check from my Arts District Foundation, and when I
Mhm.
received it, I accidentally just dropped it into my personal account.
Okay.
And so how do I put that into my business? So embarrassing.
Oh, I mean, don't be, we've all done things like that, myself included. I mean, you can just move the money over. There's no real tax mess up there. Like you can just move the money. Um, it's moving money from one bank account to another has no tax implication for you. You're just moving your own money from one pocket to another pocket. Um, yeah.
Okay.
But for your tracking and just so that it hits your bank statement, that's nice. And you'd want to do it ideally as soon as you can after you realize you made a mistake. Um, just so that when it like hits your books somewhere close to when it actually came in versus months later.
Okay, thank you.
Yeah, you're welcome. You know, like I'm a tax professional, I'm supposed to do everything right. But does that mean that sometimes I don't like run out of the house and don't bring my business credit card and then I'm somewhere and I realize that there's something I need for sunlight I need printer paper and I'm at Staples? Like, yeah. So sometimes I like make a payment. You're not supposed to do this. This is not an endorsement, but sometimes I will, with my personal card, pay for something at Staples. And then I go when I get home, and it's really annoying when I do that. And then I come home and I will do a bank transfer of that amount so that basically so that it shows up correctly on my bookkeeping is why I'll do the transfer after. So you can fix your mistakes. Yeah. Karen saying I did that with a Zelle sale. I gave a personal account instead of the business. Yeah. I had a huge one actually in Hurricane Helene when, I mean, grant you, I feel like this is pretty understandable circumstances, but when Hurricane Helene came and we lost all power and internet, um, I knew, and occasionally I could get to a hotspot in town or like someone had Starlink and I could suddenly get internet service and everybody's like, how can I help? How can I help? Right? I'm like, I couldn't log into my Venmo. And I couldn't, there was no internet service. So there was no like making a new account or, fixing being logged out of my account. So I just sent out um, the wrong PayPal account to collect, people's generous donations to help my neighbors. And I was like, you know what? If I'm going to owe taxes on that because I did that through the wrong account, so be it. I'd rather like get the money that people want to donate in the moment they want to donate it than like miss the opportunity when I have people who are like suffering like this. So that was a big example for me. And then that was the link out there and they shared it with the media. And so it was like the wrong link went really far. And I'm still generous. And you know what? I just paid out of pocket. I just paid a bunch of taxes on it that I wouldn't have had to if I'd used a different account. And it was, a small price to pay. I'm human like the rest of you. Yes, it's what's funny is like that's the name of my book and it's just becoming a theme in everything I do. Yeah, you're human. Yep, I'm human. But yes, that's why I named my book Taxes for Humans. Because it's the only ones doing taxes. Awesome. I'm really glad that today's session was helpful. If there's no more questions, I'm going to hit end on this and I will see you probably for some bonus sessions over the summer, certainly for some book launchy kind of stuff. And then in September, we'll have another session coming up a couple of months from now for that third quarter payment. Awesome. All right. Thank you all so much for being here today. Great to see you. All right. Take care, everybody. Bye.